Welcome to the daily update, where I'll go over the action in the market for Thursday, June 12th, and we'll see how things look for Friday, June 13th. Before diving into today's video, if you find it helpful, consider a 30-day free trial to the SPX investing program. This trial lets you explore my unique approach to market analysis. Full-length daily and weekly videos are available on a delayed basis after the market closes. For immediate access, become a member by clicking on the link below. Now, a few hours after the market closed, there was a preemptive strike carried out by Israel on Iran. That's really sending the futures lower. As I record this, we're down about 1.5%. That's probably going to bleed over, if it continues that way, into the open on Friday, the 13th. That's kind of interesting. But we'll really see now. This buy the dip type of thing, is that going to be able to prop prices back up? Now, one of the interesting things that we have is all of the data, pretty much all of it, that I get before I record this video was all completed and done. And so we get to see how things are after Thursday without really any influence from Friday, to see if this is going to be a shift. Now, we're not trending. We're trying to turn up with ADX, but we're still positive. Now, before the COVID crash, we were positive and doing quite well. And then we had that massive crash where we went down, and then we V-bounced out of that. We were also doing okay, not great, in March, late March into April. And then the Declaration Day, Independence, whatever it was, that President Trump announced about the tariffs, we were doing okay before that. We were still in a positive trend. And then we really came down hard. We hit the low in early April, and then we V-bounced up out of that. Is something like that possible here? Now, this could last a while, and we're coming into Friday. There's going to be the weekend. There were all these talks that were scheduled that who knows if they're going to continue. A bunch of people in Iran that were calling the shots are now not existing anymore. They've been taken out. So this could be interesting nonetheless. I mean, the U.S. has been having trouble with Iran since 1979. We used to be good friends, and that was under the Shah of Iran. But he was really corrupt, but the U.S. liked him, and then he tried to westernize Iran. They didn't like that. The Ayatollah Khomeini, who was in France, I believe, he flew back. The Shah left, and it's been an anti-American type of regime there ever since. And they're really anti-Israel. And so Israel is they're already bracing for some kind of retaliatory attack. Now, there have been some rumblings about this happening. That's why I maybe not as much, but I try to at least mention it in pretty much every video, because this could escalate at any time. Well, it's escalating as I record this, so the market is reacting to that. But we didn't really have any reaction while the market was open on Thursday. So this is going to shift things over. Where I look is at the futures prices. And as I said, we're down about 1.5%. Europe hasn't even opened yet at the time I'm recording this. So we'll see what kind of carryover there is that way. So what we're treating this video as is just, this is a snapshot before some major geopolitical things started. And so we'll take a look at how things look after Thursday, realizing that Friday could be kind of a wild day, and it's going to be emotional. You know, it's pop news, and of course everything will get twisted around, and Israel will be blamed for this, that somehow Iran is the victim in all of this. There's the protests going on in the U.S. What's it going to do to that? It's kind of removing it from the top level of the pop news right now. And there were supposed to be some protests over the weekend. What's it going to do to that? Is it going to take a back seat because of what's going on now again in the Middle East? Now, oil is up. We're in the mid-70s. I did check the price of that. We've been in the mid-60s. And if you notice over the last few days, now last week, OPEC Plus came out and said, we're going to start producing more oil in July. And that should have pushed the price of oil down. And it did for a few days. But the price of oil has been creeping up and up and up and up. It got into the mid to even upper 60s this week, and now it's up into the 70s because there's the Strait of Hormuz, which Iran controls that, and they can shut that down, and that could prevent oil from being shipped out of the Middle East, which could really drive oil prices up. That's kind of one of the tactics that they still have available to them. So we'll be watching on all these different fronts to see how it ultimately comes in and impacts the market. Of course, a lot of people have opinions. I try to follow the facts, not really leaning towards one side or the other. We just treat it for what it is and then say, okay, how is that going to impact the markets? All right, so looking back on Thursday, though, we did have a lower open. We were drifting lower a little bit there, but we saw the buy the dippers come in. We immediately saw prices climb above the unchanged level, so we went positive, and the economic reports that came out were taken as friendly. We also got above the daily pivot at 6,028. Then we pulled back down to the daily pivot. Then we bounced up from the daily pivot, and there was really not a lot of conviction later in the day, just a lot of choppiness, but we were chopping mostly higher. And we saw a little bit of a surge right going into the close, which allowed us to close at the intraday high. We were up 0.38%, not a big change in percentages, but we're still below average with volume. That's the norm these days. We're still positive in the short, intermediate, and long term. We'll see if we do get down. We're below 6,000 now with the futures. Are we going to be able to find some support below the 6,000 level? Interest rates are coming down. Now, they may continue to come down if there's a flight to safety over bonds, where bond prices go up, interest rates go down. We'll see what gold will do. That could surge because that's seen as a hedge against insanity. And of course, geopolitical things are pretty much on the borderline of insanity. So we'll see if gold gets a little bump out of this as well. There were some announcements made on Thursday having to do with the trade talks and trade deals that I'll go through here in just a moment. So Israel has launched a preemptive strike. Now they were concerned because Iran kept saying, we're going to get you, Israel, we're going to get you. Oh, and by the way, US, we have been developing intercontinental ballistic missiles, which those are far enough to also hit the US as well. Now, from what I understand, everything that I've seen to this point, Secretary Rubio came out and said, we're not involved in this. The US, Trump didn't want this to happen. And he really had a talk with Netanyahu that I don't think went all that well, but Netanyahu is the leader of Israel, the prime minister, and he felt we needed to do this. And there was a delay that was set up that was supposed to last 60 days. Well, Friday is 60 days, and now they're unleashing things as well. So for right now, but the news is okay. There's a lot of coverage on this, but the facts might be a little twisted around. Of course, depending on, the propaganda has to start to come into play at some point on both sides to say, we're going to retaliate against you, and Israel, from the river to the sea, what's that going to bleed over into the U.S.? All that is probably still going to come in the wake of this. All right, so then earlier in the day, back when things were a little more peaceful, just really crazy instead of totally crazy, President Trump had a real toughening stance on the trade with the term offers. He says, we're going to send these offers out to different countries. And this is pretty much a take it or leave it type of deal that we're going to put out there. And so that was putting some pressure on the futures, but then stocks were able to rebound from that. Then prior row the strike, there's another typo. This was one of the flags that was coming up, warning signs. The U.S. Embassy staff in Baghdad, which you wouldn't really want to work there necessarily. That's the embassy that was taken over in 1979 and kind of led to the whole problem that we're still dealing with today. The folks that worked there received authorization to leave their post, which was confirmed by President Trump later. It's like, get out of Dodge right now. Okay, and then Boeing, there's another thing. The very first crash of a 787 happened in India. We'll have to see how all of that plays out. But Boeing is a Dow component, and it got hit because of that. And so that was putting some pressure on the Dow. But then the PPI came out. It was cooler than expected. And this was part of the positive backdrop. The reports that came out, at least on the PPI level, they were taken as friendly to the market. Now, the initial claims, great. Continuing claims are starting to go up, and that's causing a concern. And I'll go through that in a moment. We're still below 20 with the VIX, even though on the update we climbed back up into the 18 range. And then we still have pretty good short-term momentum with our short-term indicators. The Stochk RSI, Williams percent R, the CCI 14 has dropped off the list, but the CCI 20 is still there. The stochastics. These are the usual charts that show good short-term momentum, but we're still far away from the 20-period moving average and the short-term RSI. Then intermediate term, still looking at these sideways, some extreme momentum oscillators like the PMO, still extreme, just kind of chopping around right now with the bullish percent indexes. And we're also far away from the 50-period moving average. No change to the Fed. They're kind of in the background right now. Really haven't been playing much of a frontline role, at least lately. And the dollar was down. It's getting hit more. It's going down as well. And interest rates were down. We're down to 4.36% with the 10-year yield. That could end up supporting stocks. The interest rates could continue to drop if we see a flight to safety, like we were seeing back in late March and into April. People were getting out of the stock market and going into the bond market. That was producing stock prices to go down and bond prices to go up. Then we actually ticked down even with an up day. We're still positive with sentiment at 61, where we had been at 62. We're not trending still. I mean, we're just a little bit above. I'll show you the ADX charts here in a moment, but there's really no conviction going on right now. Is this geopolitical event going to cause some conviction, whether it's positive or negative? And I've seen both sides. Now, remember back in 2005, there was Katrina. Now that's a different kind of catastrophe, but we were going down, down, down. I was watching the futures trading on a Sunday, and they were going down, 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 and they got so oversold that all of a sudden some buyers came in, and then we just started to go up, 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 up. And that Monday after Katrina was one of the biggest up days at that time that the stock market had had. And it's like, okay, we're getting hit by a Category 5 hurricane and the stock market goes up. Well, that's because in the off hours, the futures were really reacting to that. That's why I watch them all the time. And they had become so oversold that it was just too enticing to come in and buy. That led to a pretty big upward move, and then that carried over into the cash session. I don't know what will happen this time, but right now the futures are down and just kind of chopping around and being down about 1.5% for the S&P. But with the update, the bias is positive. Our momentum, I'm still keeping it mixed right now because we're just not seeing a lot of trending at this point. Okay, so we got PPI up 0.1% month over month. That was lower than the 0.2% that they had expected. Last time it was down to 0.2%. This is taken as friendly at the headline level. Where it was even more friendly is at the inflation level. You take out food and energy, the things you have to have, it was up 0.1%. They thought it was going to be up 0.3%. Last time it was down 0.2%. So on a year over year basis, we're up to 2.6% with the headline number, and 2.5% was the last annualized reading there. But this is what the market liked. The core year over year number is now 3%, where it had been at 3.2%. That's showing inflation actually going down. Now, initial jobless claims came in as expected, 248,000. And last time just up a little bit. This is the concerning number. We're at 1.956 million with the continuing claims, where we had been at 1.902. That's a pretty big jump for continuing claims. So there may not be as many people filing for the first time. Those are initial jobless claims. These are people that are unemployed longer and they're having a bit of trouble finding another job. And that's another area we want to keep an eye on to see if the employment area is holding up. All right, so here are the charts of weekly claims, flat, just pretty much from the same reading. Even though the moving average is going up, we're just at the high end of this range that we've been in. This is the concern. We're seeing a spike up here with the continuing claims. So as I said, this could be longer term negative. So we're seeing a spike up with the blue line. Those are continuing claims. The red line are initial claims that's flat, and then the latest reading of unemployment is still at 4.2%, which we had updated when the employment report came out. Switching over to PPI, where the total reading, the blue line, going up just a little bit here, but still above 2%, also declining a little bit with the core, and that's the year over year inflation take. Then final demand year over year, goods are going up, services are declining slightly. That kind of goes in line with the ISM services report that came in under 50. That shows contraction when it's under 50 like that. And then intermediate good, processed and unprocessed goods. We're going up with the processed goods, kind of flattening out after declining with the unprocessed goods. Then here's the chart where we look at the year over year and month over month change. The headline number is still going up here, and we went up on a month over month basis with the 1 month rate of change here. This is the inflation part where we're starting to level out year over year basis, still at that 2%. This says it at 2.56%, or month over month, it's actually showing a little bit of a decline here. All right, then our Isabel Net blog charts. We had this report earlier in the week. I believe it was Monday, the NFIB Small Business Confidence, and then it compares them with how small cap stocks are doing. Well, we saw a little bit of a bump up with the latest reading, even though this is still showing it going down. But and the small caps are back to their usual thing now. That's the orange line here. They had a couple of good days. They had a pretty good week last week, and now they're starting to give back those gains again. Oh, I see. This is the annual change. I was looking at it from reading to reading, that it was actually looking improving. Then stocks are up and Trump 2.0 finally. Well, let's see if it stays that way. But we pretty much, as of Thursday's close, and we're close. We're within 1 to 2% of the all-time high, and we've pretty much have recovered what was lost during that big downturn in March and into April. And then we'll see, okay, where do we go from here with all of these other things that are now happening? Then announced buybacks way above what it's been over the last few years. And that's taken as positive when a company wants to buy back its own stock. Then exposure to equities has been improving as the market's been going up. And some, I like this play on words, some kind of wonderful, little, what, grateful, no, Grand Funk song there. And this is one of the perma bears that I follow was just all excited about this a few months ago. When we go above this dashed line, which is 0.5%, and this person, Sam, I actually follow this person on Twitter, X, whatever you want to call it, and it has a really good track record. But when we went up above this zero point 0.5 level, that usually means, okay, real concern here. We're going to go into a recession. Well, even on X, the person who created this and did all the research for this was saying, I don't really see it this time. Yes, we're getting a high level like we usually get, but it may not be happening. Now, that person could be proven wrong. But since we had that reading up above zero point 0.5, and I pointed that out at the time, in the weekly video and even in a few of the daily videos, we've been declining now with this. And so, okay, now the jury is still out as far as whether we're going to go into a recession or not. We don't know. That's why we watch the employment data. That's why we watch all the economic reports. But it's like, okay, if you had done a lot of reacting to what the perma-bear guy that I'm referring to was saying, you would have got out at that point. Okay, you would have missed a lot of the swoop down and the move back up, but still the market is holding together quite well, at least as of Thursday's close. All right, then risk appetite going above the zero line as folks are willing to assume more risk lately. And then real expensive dollar. Okay, history suggests the dollar is ready for a period of decline. Well, we've already been in a decline. It's been in a downtrend for quite some time. But they think it's even going to drop more than where it has been already. And it's holding up to that right now. Market pricing for the number of Fed cuts in 2025, it's this just 1.73. I don't know how you have one, 0.73 of a cut, but that's what the market's figuring out right now. Mastering the stock market is challenging and can take decades to achieve. Most beginner traders and investors feel overwhelmed and often fail. Stay ahead with the SPX investing program. Members gain access to the full program. Other options include immediate access to videos as they become available. Alternatively, the daily and weekly newsletters may be helpful. Click on the link below to find out what's best for you. Okay, here's the chart where we did have a lower open, and then we saw the buy the dippers come in, and that's very true. Remember, the amateurs open the market; it's the professionals who close it, and so they see a little bit lower price. They automatically think we're going up. They like the price being lower with some of their stocks. That ends up pushing the index up. We got above the daily pivot. Then we came back down, and the daily pivot acted as support. We bounced up from there, but then we just saw a lot of choppiness for the rest of the day and a little bit of a surge going into the close. And here's where we're seeing a little bit of a drop off here with the futures, because this tries to measure not only while the market is open, but what's happening in the off hours as well. And this is a little bit of a concern, and I've been pointing this out over the last few days. We're seeing the red line starting to cross above the blue line on an intraday basis, meaning that value is outperforming growth. There's a little bit of defensive buildup that's been happening in the market. But we're doing okay, but just kind of chopping along sideways with our S&P growth to value ratio. Now we're still looking at the bigger context where this has been going up, but then we got into June and this ratio just continues to pretty much flatline sideways. All right, so the end of day growth was up more than value for the large caps, and it was up for the mid caps where value was down for the mid caps, and both were down about equal with the small caps. So looking at our end of day charts, still looking okay here in the bigger picture with our small cap growth to value ratio, even though it's been pulling back, and still looking okay with mid cap growth to value on the end of day ratio here. We're still working off of a now generated golden cross with S&P growth to value. So this is still holding up for right now. Still doing okay with our growth to value ratio between these two ETFs. And discretionary to staples still above the 200-day moving average. Not doing all that great, but not doing really terrible, at least right now. Then here's where we're trying to turn up a little bit here. You might call this a trend, but what kind of a trend? It would be a positive trend because the green line is above the red line. And if we're getting set to go down for an extended period, or is this just a short-term blip that's going to happen and folks are going to see it as a buying opportunity, that could kick us in and have us look more positive. That's why I brought up the Katrina story, because it was like, okay, yeah, we're going down, down, down. But throughout the night, everything switched over back to being positive. So we're coming up a little bit here, but really not trending. But we are positive. Also trying to turn up and just a little bit above the moving average, but really no conviction there. But we're positive on this chart as well. Volume below average. We continue to be seeing that day after day. We did tick up a little bit with the VIX, even though it was an up day, but we're still below 20. And we saw the VIX of the VIX really picking up. It's coming back up into the moving average, which just shows the volatility of the VIX is picking up a bit there. We declined with this fear gauge where we went up with the other fear gauge. So seeing a bit of a non-confirmation that way. The latest reading of individual investors, because we've been going back up, they're now switching back and looking more positive. They're just barely above zero here, coming in at 3.1 with the latest survey. We saw a bit of a tick up with the equity put call daily chart. We're still going down with the 5-day chart, and we're just kind of chopping around with the 10-day chart. And seeing a bit of a pickup here with volatility risk premium starting to break out of the band. This could suggest that there's some fear coming back into the market. Advanced decline line still looking good based on price and volume, and still above zero with the advanced decline ratio. Declining a bit, but still above zero with the advanced decline ratio here. Sorry, this is the advanced decline oscillator. This is the advanced decline ratio. And pulling back a little bit with the 5-day and declining slightly here with the 10-day with the new highs, new lows. And it's not that we're seeing an expansion of the new lows. It's more of a contraction of the new highs, which we've seen before. And still looking positive here. When you look at accumulation distribution, still above the advancing moving average, even though the boom indicator is just kind of ticking up, ticking down, whether we have an up or down day. We're flat now with the Chaikin money flow. The red line is you could still say it's declining, but we're going up. We were negative. Now we switch back over to positive with the Chaikin oscillator. So seeing a bit of a mixed picture with our smart money indicators, an improvement with the vortex, the green line going up and the red line going down. We're dropping back here with the 10-day average of the highs and lows for the S&P, where we're still just a little bit above this green line, which that's longer term positive. And that really thrust it up, and now it's been giving some of that back. Positive with all of our advanced decline line studies. We're above the moving averages with all the indexes, even though small caps declined. S&P was flat to slightly higher. And still looking good here. This is a broad market measure of a 5-period moving average of the highs minus lows, still going up above zero. That's showing more broad market strength internally. Still above 50 with the 20-period moving average of those stocks inside of the S&P, going up with the 50, going up with the 100, and going up with the 200s. And all of them are above 50, so they are still positive. So here's the daily chart. One thing that's interesting is we came right up to this pivot point here, this dashed line, which was already on the chart. We've already got them drawn in here for July. And then that was the high that was set. And even though we were up, we have not been able to surpass that high, at least yet. That's more short term, though. On the bottom, we continue to be below average with volume. So saw a little bit of an improvement with the 20, 50, and we're flat to slightly going up with the 200 period moving average study. Then on a short-term basis, the Stochk RSI showing positive short-term momentum, as is the Williams percent R. CCI 14 dropping down below this blue line, but the CCI 20, even though it declined, is still looking positive there. And all of our stochastics charts are extreme positive in the short, intermediate, and long-term subdivision of the short-term time frame. And ticked up, it's still below the midpoint with the force index. The condition of the short-term trend, still seeing the green line and the blue line going up. And we're still up at the higher end of the +2 channel with the standard deviations chart. Balance of power, it was showing some weakness. Now it's starting to show some strength as we bounce back up and are looking positive here. Still looking good with the short-term trend with the green fluorescent line, and all of the lines continue to go up. We're still positive with the go, no go. Positive with the highest high value. We're hitting the blue line up here at the top. Still positive with the Landry light as well as the proper order. And we're actually turning more positive again with the TTM squeeze. It had been declining. It was negative. It was darker blue. Now it's starting to go back up and turning lighter blue again. So that's finally seeing some improvement. And a little bit of an improvement here with the ease of movement. It's still above zero. The Arun is giving us quite a high reading now, meaning buyers are mostly in control, and we're above zero. And we're just where we just barely ticked negative with the S&P McClellan oscillator. Now we just barely ticked back positive. So, okay, we should be going up slightly here with the summation index based on price. We're continuing to go up based on volume, and that could be positive when volume leads price. And just a little bit of a tick up here with the NYSE McClellan oscillator. So we're still going up with the summation index based on price and volume for the NYSE. The swell trading oscillator, we were getting a mixed signal. Price was starting to flatten out here where volume was still going up. Now they're back to both going up. And here's one of the momentum oscillators, the PMO, still extreme. It's above this red line. It's still above its moving average. Now, internally, we are seeing an improvement. We're starting to turn back up, but we haven't quite crossed above the moving average based on price. We're crossing above the moving average here based on volume. And a little bit below 50 with the PMOs that are rising, a little bit below 50 with the buy signals in declining, and still getting a pretty strong reading here with the PMOs that are above zero. We've gone from neutral back to positive with the Elder's Impulse system for the S&P. We're still positive with the parabolic SAR. And we're, believe it or not, we're starting to turn up and cross above the moving average with the slope oscillator. Now we turn up and go, we're going to be extreme again, because then I use this, I put these lines on here, and I look at a long-term chart, and I say, okay, this is kind of a good point to pay attention to this. But it could be positive if we continue to see this crossing back above the moving average. And the MACD is still pretty much drifting lower. So we're starting to turn up with the slope oscillator. looking a little bit better, but no real conviction here with the other short-term oscillator, the TSI. Flat with the MACD, flat but positive with the PMO, flat but declining with the PPO. Longer term tricks and KST, they're looking more negative, but both of them are above the green line here with the tricks and also the blue line here with the KST. They're starting to drift lower now, longer term. Improving, but still negative with the Copic curve. Declining, but still in the green area with the Sean trend meter. Above 50 and advancing with the money flow. And ticking up, but above 50 with the ultimate oscillator. Still above the advancing moving average with on-balance volume. Starting to get extreme again with the short-term RSI. That's based on 9 periods, where the 14 periods, that's more intermediate term. It's still above 50 and looking pretty solid. Intermediate term trend still doing well, and I base this on 50 periods above all the plotted moving averages, still far away from the 20 and 50 period moving averages. That's what the boom indicator tries to measure. And just kind of chopping around here, a little bit up, a little bit down with the bullish percent index, and just kind of stagnant right now with the NYSE bullish percent index and flat here as well, but still extreme positive with the NASDAQ 100 bullish percent index. Still working off not a real convicted buy signal here, but the black line is above the red line with the Pring bottom fisher. And still looking okay here. We're up for the week. We're up 0.75% going into Friday's market. We'll see if we can end up having some kind of an up day that will really help these longer term bars to show even more improvement. All right, still positive with the Heiken Ashi. We're positive with the Kegi chart, positive with the Renko, positive with the three-line break. Yep. Okay, still above the midpoint with the 150 and 200 period moving average studies, and still no changes here. Negative in the long term with with the mid caps and the small caps. And commodities, positive in the short and intermediate term, still positive with bonds in the short term, negative with the dollar on all time frames. And so we saw utilities, that's more of a defensive area. It led the pack higher. Tech did well. We like that. And then way down here, discretionary and communication, they were down. These are two big growth areas that didn't have a very good day. And so Canada setting another new all-time high there. We had an industrial ETF bullish 50 over 200 moving average crossover. That's positive because we've been seeing some weakness in that area. The euro's just really massively going up compared to the dollar, and the NASDAQ dropped down below 19.6. Here is the carpet. So tech had a pretty good day. We see Microsoft. Microsoft's been doing quite well. You'll see that chart later. And Nvidia was up, Apple was up just a little bit, but when you see green in tech, that's more positive. And Amazon was barely unchanged, Tesla was down, that hurt discretionary. Then communication, Google and Meta were down, as well as Netflix. So that's why we didn't see a real improvement with the growth versus value. A little bit of a concern here. We're seeing the weighted version of the S&P outperforming the equal weighted version. Even though they're on different scales, they usually track with each other. And when one gets above the other, that means the top one is typically outperforming. And looking at the ratio here, the weighted version to the equal weighted version, when this is going up, that means the weighted version is continuing to outperform. We're still above the 200-day moving average with the Dow, in spite of Boeing not doing all that well. Positive with the diamonds with the Elder's Impulse system. And now we're starting to see a little bit of a concern here. The NASDAQ was setting a series of higher highs and higher lows. We set that high on Wednesday, and now are we possibly starting to come down a little bit? Very short term, pure speculation. We're seeing the same basic chart pattern for the S&P, but it would really help things out if the NASDAQ could get above this R1 pivot point. And we're seeing the neutral signal for the NASDAQ with the Elder's Impulse system. Also, we haven't made another higher high. But again, we didn't make all higher highs day after day here. We look at the pattern in the general sense of is it going up or down and looking better. We're neutral with the Elder's Impulse system for the NASDAQ 100. Momentum, we're still going down with the PPO. And here's small caps. Had a good week, really shot up. Then been pretty much giving them back since. So we're coming down with the other Russell 2000 small cap index that we follow. and it's coming down after being above 70 with the RSI, hitting the 200-day moving average, and that could be providing overhead resistance. It has provided support before. Now is it going to end up providing resistance? Neutral with the Elder's Impulse system for the small caps, still below the 200-day moving average with the mid caps. Neutral with the mid caps with the Elder's Impulse system. Still hanging in there okay with the Wilshire 5000 broad market measure and the total U.S. stock measure as well. They're hanging in there all right for the time being. Financial sector looking pretty good. Not showing a lot of conviction here, but what's causing some problems, and I've been pointing this out pretty much all week, the financial sector is really starting to underperform the S&P, where that wasn't what we were seeing before. We were seeing the financials holding up. And this is a little bit of a concern. We're just keeping an eye on this for the time being. FANG index doing well. I believe that's a new all-time high on a closing basis. These are the big stocks. So Apple was up 0.21%. Amazon was virtually unchanged. Microsoft breaking out, all-time high, doing really well ever since they announced their earnings report. Google was down almost a percent. You had Meta, which was virtually unchanged, down slightly. Tesla giving back a little bit after it was able to recoup what was lost a week ago. Nvidia was up 1.5%. And Netflix down 0.4%. After setting a number of all-time highs in a row, you have some profit taking coming in there, most likely. We're still tending to go down with the staples to tech ratio, and this ratio going down is more positive for the market. Still fairly strong relationship between US and world stocks, still seeing a gradual increase in the correlation longer term. Oil, now this isn't being reflected in what's happening. This is just the closing price. It actually had it down a little bit. It's up into the 70s now when I check the futures prices. Dollar in a downtrend, breaking even below 99. Now, here is the Trueflation take on inflation, where what we had came in at 2.4%. Trueflation is coming in with inflation being at 1.91%. And we're still below 4.5 with the 10-year yield. That's good. That could support stocks. And we're breaking above the 50-period moving average with the 10-year based on price. We've gone inverted again, just barely, 0.01 minus. But now the 10 to the 3-month is back to being inverted again. Just want to keep an eye on that. And still looking okay, but not showing an awful lot of strength now. When we look at the Qs to S&P, back to looking not so good again with discretionary to S&P, and doing okay when we compare large cap growth to large cap value. Coming down to the moving average with the large caps, looking better with the mid caps, and still hanging out at the moving average with the small caps. With each video and course, members learn to implement the consensus approach, a unique analytical method. Unlike relying on a few indicators that eventually fail, this approach overcomes analysis paralysis by using the weight of the evidence to draw conclusions. Developed over decades across all market conditions, explore the SPX investing program and start with a 30-day free trial. All right, so haven't changed this. Still positive in the short, intermediate, and long term, but we're not trending. We're going to get consumer sentiment on Friday. We'll see if that has some kind of an impact. Later, that's been playing a bigger role. All right, then, okay, geopolitical. Israel, Iran. Okay, that is going into a new phase there. What's that going to do? It's what all the news is going to be talking about. The protests will probably combine with the immigration things and anti-Israel stuff. We'll just have to see how that morphs over the next coming days. And then finishing out the week with the economic calendar. Also, we already finished this calendar out here. Now, seasonally for June 13th, even though this is a Friday the 13th, we're neutral to positive with the Dow, we're positive with the S&P and the NASDAQ. And we do see a little bit of trailing off here on the 13th going into next week. Now, we're going to be heading into the second half of June, which during a post-election year, that can see some weakness as the rest of the month plays out. And then things will calm down as school gets out and people start to go on vacations and maybe not an awful lot of conviction going on. But I've also seen summer months that have been just totally crazy too. So you can't always take that as that's always the way it's going to be. So June 1950 to 2024, a little bit better than half of the time it's up with a 0.2% gain. All right, so I thought I had another one in here. Guess not. Okay, positive side of our indicators. Now we're positive with our long-term growth to value ratio for the S&P. That generated a golden cross recently. We're positive with the bullish percent indexes, even though who knows? Try to look at the chart and figure out if it's positive or negative right now. We're just kind of chopping around these days. We're back to looking positive with the S&P and NYC McClellan oscillators and summation indexes. The S&P just barely came back above zero again. Swing trading oscillator is now back to positive where it had been mixed. The parabolic SAR, the oscillator still positive, but just not really doing all that much right now. The ease of movement, money flow, ultimate oscillator, and the vortex are positive. Financial sector is positive, but we're keeping an eye on the ratio between the financial sector and the S&P. And then we do have that sideways now looking praying bottom fisher buy signal that was generated. Here, this we got, all right. So this is looking at June going back to 1950 during post-election years. Not a great track record. Ends up being down more than up with a negative average return. All right, and here are the pivot points, which have already been updated on the YouTube community tab. Okay, I don't know how this got out of line here. Okay, so then on the negative side, accumulation distribution, you could treat that as positive. You could also treat the chicken oscillator as positive, but the chicken money flow is now flat. But if you're more aggressive with the accumulation distribution, we tick down a little bit, so you might be leaning more negative. And the discretionary to staples ratio, it's still in a downtrend, even though the ratio is above both moving averages. Choppy curve is negative, but improving, and the long-term special K is also negative, not really improving right now. And the momentum for the NASDAQ 100 as well. All right, our conclusion. No changes to this. Positive in the short, intermediate, and long term, but we're not trending, and that's what we're seeing across all of these different time frames here. Thank you. I hope you have a good day on Friday, and I will talk to you in the next video.